Good evening, you're watching The Big Question. I'm Sanjana. Today, at a time when Indians are standing united against an unfair and unilateral trade assault by former US President Donald Trump, the Indian opposition has chosen its side. And shockingly, it isn't India. As Trump fired off a fresh tirade against our economy, threatening 25% tariffs last night and penalties, the leader of the opposition echoes his claims. Instead of defending Indian enterprise, he amplified an outsider's attack. Let's be clear this evening. There is no big question tonight because the answer is crystal. No, the Indian economy is not dead. And every serious expert, from global investors to economists, will tell you this. India remains one of the world's fastest growing and most reliable economies, period. We've lined up a power-packed panel of experts from across the globe to cut through the noise and focus on facts this evening. Joining us this evening is Richard Harris, CEO, Port Shelter Investment Management, with a global investor lens from London. Manishi Ray Chaudhary, CEO, Emma Capital Partners, tracking Asia's investment pulse from Hong Kong. Anubhuti Sahai, Head of South Asia Economics Research, Standard Chartered Bank, with the macroeconomic view, joining us from Mumbai. And Shankar Iyer, political economy analyst and author, decoding the politics behind the perception, all the way from Toronto. Thank you so much to all of my panelists for joining me this evening. Anubhuti, GDP is growing, inflation is cooling, forex reserves are stable. What data are people missing when they say that the economy is dead?
I think, as you very rightly said in the beginning, let's cut down the noise and let's focus on the facts. So let's just focus and stick to how this whole trade negotiation would go ahead and not get too enamored by the negative noise. So if you may allow, I might just quickly run down our view on what we think are the likely implications of the announcement last evening. So, I mean, in terms of the overall impact, I do believe and we do acknowledge and admit that the last evening announcement was negative. It was negative on three counts. First, initially, before the August 1st deadline, India was going with an expectation that tariff rates for India would be favorable between 10 to 15%, which then quickly shifted to 15 to 20%, and then we ended up with 25%. The second source of negative surprise was this tariff rate, which was announced, is much higher than what has been announced for other countries in the recent past. For instance, this morning we got a tariff rate announced for South Korea, and that was at 15%. Even if you look at Japan and EU, which had a far more difficult trading negotiation, they also have been tariffed at 15%. Vietnam is at 20%. So I think that is the second round of source why everyone took 25% as negative. And a third, which made the 25% actually look extremely, hard hitting, is the added penalty because India purchases goods from Russia. So I think these are the key issues. But as we all know how this negotiation has gone for rest of the world. So probably we'll have to be a little bit more patient and see what the final tariff rates for India turn out to.
Absolutely, and I think that's a stance that the government is also taking. We just heard comments being made by the Commerce Minister, in the Lok Sabha. But I'm going to actually steer back the commentary, coming back to what was said last night by US President, what has been said in Parliament. Richard, India just clocked 7.8% GDP growth. How does that compare with economies like the UK or US that critics often hold up as models?
Well, of course, those growth rates are spectacular compared to Western countries. And of course, India is still developing. It's still in a position where you are likely to have much higher growth rates. So essentially, it's doing very well. I think that people should not get terribly exercised about Trump's comment. It's clearly fatuous. It's clearly written in the spur of the moment, when perhaps head wasn't moving quite as fast as fingers. So I don't think that's really an issue. I think what we do need maybe to focus on a little bit is clearly Trump has got a downer on the BRICS. He doesn't like the BRICS. He thinks they're anti-American, and you can see that because Brazil has also been sanctioned quite heavily, indeed much more than India. They're looking at 50% tariffs on Brazil. And in addition to that, Trump is influencing or seeking to influence Brazilian politics quite significantly by looking to pardon the previous president. I mean, this is something that, America would normally decry, this kind of intervention in the detailed politics of another country, but they're doing it. And I think it's all hinging around the fact that for one reason or other, Trump really doesn't like the BRICS.
Absolutely. I think you laid it out very clearly. Manishi, if the economy was indeed in ICU, would FDI continue to rise? Would Indian markets outperform most of Asia this year? What are you seeing from Hong Kong's lens?
So first of all, let's put that comment of India being a dead economy, into the dustbin, for lack of a better word. It is clearly not made in a serious frame of mind. As Richard correctly pointed out, growth rates are spectacular. They're not really comparable to Western countries because India is in a different stage of its economic life cycle. Now, as far as your second comment about the foreign investors are concerned and their relative preference within Asia, India was actually attracting decent amount of FII flow if you look at the months of April, May, June, but that has reversed in the month of July. In July, clearly, investors are looking more at North Asia. We have had spectacular flows, 7 billion into Taiwan, 3.1 billion into Korea, very strong flows into Hong Kong, and India has had an outflow of about $2 billion. While this uncertainty regarding tariffs is one contributor, I think the bigger contributor clearly is the earnings trajectory, because this strong GDP growth, 7.4% in the last quarter, is not quite getting reflected in corporate earnings. Earnings estimates have been declining, while India still remains relatively expensive. If you look at the commentaries that we have received from the companies, particularly in consumer discretionaries, in consumer staples, and some of the IT companies as well, the picture doesn't really look all that great as far as corporate earnings are concerned. And I think it's these real variables, real on-the-ground variables, that the investors are concerned about.
Okay, that's fair. So, Shankar, then what about the other aspects that have been raised? And I think that the government has responded to it fairly appropriately in the Lok Sabha when it comes to jobs, when it comes to MSMEs, when it comes to GST, when it comes to demonetization. Are these kind of headlines that amplify Trump's attack and the opposition seeming to endorse it? What is the long-term cost to brand India? Shankar, if you can hear me? Okay, all right. We'll try and get Shankar back in just a moment. But maybe if I pose that same question to Anubhuti. Anubhuti, we've seen these headlines amplifying the attack, and of course, opposition seeming to endorse it. Is there any long-term cost, number one, to brand India? And most importantly, I think the kind of allegations that are being made, whether it's regards to jobs or MSME or GST or demonetization, is there any fact or data to all of that?
I think we need to just break it down. So first is that this is not the first time that we have heard such scathing comments coming from US. And we have also seen very quick turnarounds, U-turns on such comments. So I do think that is something which we'll have to keep a close eye on. Secondly, given that India is not the only exception, most of the economies, whether it is EU, Japan, or even a lot of Asian economies, have gone through a similar cycle. I don't think the brand India gets impacted because of these comments. The third part is that India is headed to become the third largest economy, despite all the challenges which you described on the job front, MSME front, or even say if we talk about the low productivity in a lot of sectors in the economy. So if an economy is headed to become a third largest economy in a matter of 5 years, and where the transition from a lower middle income economy to the upper middle income economy is inevitable, such periodic. Such a brief episodes of negative comments cannot is unlikely to last for a very, very long period. So I really don't think that's a erosion, and that kind of is pretty well demonstrated if you look at the rest of the world and the effort which they are putting to strike trade deals with India. India-UK FTA trade deal has been done in a record time. I think even the most optimistic person didn't expect it to happen in such a short span of time. And what we gather is that despite a lot of reservations when it comes to the India-EU FTA, things are progressing well. We are also getting the Philippines president visiting India, and so it's like the rest of the world is trying, is definitely vying to partner more with India, and that on its own speaks a lot about brand India, along with the potential it promises over the next decade or so.
Okay, fantastic. Shankar, if you can hear me now?
Yeah.
Okay, fab. So, let's talk about employment for a second, because from what we're seeing right now, this has been a constant narrative, like Anubhuti actually pointed out. Joblessness as the proof of the economy not working, or, quote unquote, being in the ICU, being dead. But we're looking at EPFO data actually showing pretty differently, formal job creation kind of picking up. Is there a gap between statistical reality and, this kind of political messaging?
Well, it's said that statistics can be tortured to tell you any story that you want to hear. So leave that aside. I mean, hyperbole is a slippery slope in politics, and people tend to sort of go into. US President Donald Trump doesn't have a PhD in economics. No, neither do people in India who are commenting on his kind of idiotic, tempestuous remarks. But the point is that your viewers would know, the Nifty 50 is probably the second best returns over a 10-year period after S&P 500. India's moved from 11th in the economic hierarchy to 4th. India's trade balances are far better than that of the US. Its deficit is better than that of the US. Its internal debt is better than the US. So let's not get perturbed by what President Trump says. He says things to make his goals achievable. At the same time, the fact that we have received tariffs which are higher than expected, higher than countries such as Vietnam and Korea, will stall some of our ideas of the China plus one offshoring of manufacturing, our own plans. And this requires India to ramp up its own competitiveness. You might want to look at what Tamil Nadu is doing right, so other states can do it. I think the debate should be more on what needs to be done and less on what Mr. Trump or anybody else says. Mr. Trump cannot define the destiny of India. The destiny of India will be defined by Indians and what they do or don't do. There is an old saying in Hollywood films, don't get high on your own supply. I think it holds true for those in the US and in India.
Thank you for that wonderful quote, Shankar Iyer. And Richard, because coming to the optics part of it, and I know that everybody of here is kind of voicing the same thing, and this is actually a pretty resilient and I would say timely and extremely poignant stance that even India has taken. Not to have any knee-jerk reactions, don't react. This kind of statement is, of course, volatile. But Richard, you've seen how foreign investors respond to both policy and perception. So let's come to optics for a second. Is anyone outside political circles actually buying this dead economy label?
Well, I don't think not only outside political circle, but any circle at all, except for those within the very limited MAGA circle who basically have to pay fealty to the president. As I was saying, I don't think we should necessarily worry about that. He does come up with these bold statements in order to try and make a point. And so he really exaggerates in that sense. But I think that there actually is quite a serious point here, which is that it's quite clear that most governments in the short term, and this goes for Europe, this goes for Japan, South Korea, you name it, all governments have basically fallen in behind Trump. They've done exactly what he wants. He's been highly successful in terms of threatening people with very high tariffs and then finally negotiating at around the 15% level. And I kind of think that's the level that most countries are going to end up at, including India. It's very damaging, of course, because at the moment the markets think 15% is great. But of course, average tariffs into the US pre-Trump were only 2.2%. So we're looking at a very great increase in tariffs that will be paid by Americans, that will hit Americans, and will be very damaging for America. So Trump may well have won the current trade battle, but he's not going to win the trade war. And I think that it's important for investors to really look forward and look over the valley at the situation that's likely to occur when these tariffs come in full force, maybe in 6 months' time.
Okay, that's fair. So then, Manishi, in that case, what do you think the real economic indicators, manufacturing, services, exports, what are they telling us about what's happening beneath this political narrative?
Absolutely. So let's break it down into two parts. First, the impact of these tariffs. If they stick around, if it's actually 26%, first of all, we don't know. Because there is a sixth round of talks still yet to happen in late August. And we still don't know whether there would be any exemptions like in pharmaceuticals or so. But if we assume that this 26% is going to stick around for the full year and beyond, India's exports to the United States are about 87 billion, 85 to 87, which is about 2% of India's GDP. One has to go into some details about price elasticity of what's being exported and what part of the price increases would be absorbed by the exporters and so on. But broadly, back of the envelope calculation would lead to a conclusion of about 0.2 to 0.3% impact on the GDP. There are certain sectors which would be impacted more, where the proportion of exports to the United States are more, which are garments, leather goods, maybe pharmaceuticals, and even industrial and other manufactured components like auto components and so on. So those are the sectors that one has to really look carefully at. Ultimately, what this would lead to is obviously a stronger support and almost an imperative for domestic consumption and domestic industries. It is something what China is trying to do, in terms of revamping or rather turning around the economy more towards domestic consumption. They haven't been fully successful yet. But India would also have to continue the process that they started and possibly revamp and reinstitute, the measures like PLI and other schemes to increase domestic industrial output. And I mean, those are the only long-term solutions to this problem.
Okay. All right. I'm afraid we're running out of time, so I'm going to take in one last response from Shankar. Shankar, we're seeing that this is a critique that constantly comes up, whether it's unemployment, whether it's rural distress. Would you say that these are systemic failures, post-COVID recovery pains that are being exaggerated for politics?
Well, a simple fact that the employment data produced by the Government of India, the periodic labor force survey, shows that 46% of Indians are engaged in the rural economy in agriculture. Manufacturing is at 13%. And that these almost every second person who is in the workforce is dependent on 45% of the workforce dependent on 1/6 of the national income is not a happy story. So the point that we should focus on is what is that is not being done? Why are the states not accept adopting modern methods? Why is the new labor code still delayed? Why can't states initiate their own farm reforms? And those are the things. If we make India more competitive, the rest of the story will pan out. And it doesn't matter what Mr. Trump says in the White House or what people say in the Lok Sabha. It is for India to improve its competitiveness. There is always, as I said earlier, statistics can be tortured to tell you any story. So there is always about India. The other quote that one must remember, that everything that you hear about India, the opposite is equally true.
All right. So if I had to then just, for final thoughts, Anubhuti, is there any credible economic data, not any kind of rhetoric like this that is volatile and keeps changing with the season or every 24 hours, anything that supports this claim that India is quote unquote a dead economy?
Not really. There are challenges for sure, but as Shankaraya very rightly said, there are bright spots within the Indian economy, but there are also challenges which India needs to overcome for its own sake from a medium-term perspective.
Right, Anubhuti, Richard, Shankar, and Manishi, thank you so much for your time and for joining us for this very crucial discussion on the big question this evening. Like we've been saying, India's GDP grew at 7.8% in the last financial year, the fastest among major economies. Foreign direct investment continues to flow in. Equity markets are near record highs. Forex reserves are stable, above 600 billion, and inflation is moderating. You heard it from the panelists this evening. I'm not the one saying it. According to British historian William Dalrymple, India has grown twice as fast as the US over the last 10 years. The IMF still projects India as the fastest growing large economy this year. So when Donald Trump calls India a dead economy and the opposition echoes him, they're not citing economists. They're ignoring them. Numbers don't lie, and India's story by every global benchmark is still one of momentum, resilience, and growth. Thanks for watching.